Welcome to Bloomberg BusinessWeek. I'm Carrol Massar.
And I'm Jason Kelly. We're here at Bloomberg headquarters in New York.
This week, it is all about the Super Bowl. The game will be played at Hard Rock Stadium in South Florida. We catch up with the Hard Rock chairman and CEO, Jim Allen.
Plus, I sit down with the NBA's Chris Paul. We talk about Bob Iger, David Stern, and learning how to say no.
So much. And if you haven't watched it, well, you've probably heard about it. We explore the pseudoscience reality TV of the Goop Lab on Netflix.
For more on all that and our cover story, here's editor Joel Weber.
He's been in the league for 15 years now. He's the point guard for Oklahoma City Thunder. And it's sort of just like his portfolio keeps growing. Like, at the beginning of his career, he was just like the guy that did those funny State Farm commercials. Yeah. And then it turns out not only does he do that, but he's now in Beyond Meat. And that's like a huge element of what he's built out, is sort of this portfolio of brands that he works with. And he doesn't consider them endorsements, as you learned. Right. He considers them partnerships.
Well, and also notable, he's the president of the Players Association. That makes him an incredibly powerful voice and influential. And we also talked about Adam Silver and notably David Stern, the late commissioner of the NBA, who had a profound impact on the league, but also Chris Paul's career.
That's right, and helped the league really go global, and that's sort of also what connects back to that Joe Tsai story that we have in the issue, is that the NBA, unlike other sports, has really done a good job of going international, and Chris Paul, obviously representing the players, is one of the faces of that.
All right, the boys talk sports, the girl brings in Goop Lab. So let's talk about this. Polly Mosens has a great story, and this is all about Gwyneth Paltrow's company, but now she's going streaming, right?
Yeah, that's right. Netflix has a new show with starring Goop, basically. And as Pauly kind of points out, like, Goop is sort of, it's been criticized for a long time about how it does some soft stuff and wraps something that might be serious in some other things.
You have to write a show that starts with a disclaimer and a warning before you even hear anything. Yeah. Hey, folks,
this
just so you know.
Science.
This isn't science.
That's right. Yeah.
Although, as Polly says, they probably should keep that warning up. On constant loop throughout the show.
Come back to the end of it at the end of the show as well, right? Yeah.
Just a reminder.
So Polly is really great on this, and it's a funny read.
All right, the cover story this week. What a read! We loved catching up with Dana Hull about this because Carol and I were talking about this offset, just this idea of having a go-to like that on one of the biggest companies, most influential companies, is kind of amazing for Business Week.
That's right. I mean, Dana is amazing, and like her day-to-day coverage of Tesla has been phenomenal. And we asked her to kind of go bigger about a sub-thread that I don't feel like had been actually covered, which is Tesla Q, which is this really vocal group of Tesla haters. They hate Tesla, they hate Elon Musk, and they've basically been rooting for the company to fail.
And many of them are short the stock.
Right.
Very short, and that has gotten incredibly expensive as Tesla has climbed, not only this year, but over the past few months, reaching all-time highs now. And so it's really like a battle of conviction. Like, they really don't like this company, and they're willing to lose money on it, hand over fist, billions of dollars, and yet how much longer can you keep that up as the stock keeps soaring?
So for more on that cover by haters.
Love this story. We caught up with reporter Dana Hull in San Francisco. Her story about selling Tesla short.
It's sort of known as Tesla Q, and the Q is added to a company's stock symbol when it files for bankruptcy. Clearly, Tesla has not filed for bankruptcy, but there is a fairly significant group of people who sort of either feel like that's inevitable or they just are not buying what Elon Musk is selling. And, there have always been critics of Tesla on, Yahoo Finance and Seeking Alpha, but kind of over time, the criticism of Tesla migrated to Twitter, and the hashtag Tesla Q really kind of came into vogue over the past couple of years. And with every big news announcement or big news event, like when Elon attempted to take the company private at $4.20 a share, you just saw the Tesla Q hashtag more and more. So it's this sort of fascinating world of people that are very critical of Musk. Some of them are short sellers, some of them are just critics, and it's almost like a filter bubble where, if you just follow the Tesla Q hashtag, you get a completely different view of the company than if you follow Musk and all of his adoring fans.
There's one critic in particular, Dana, that you go into, Randy Pothi. Tell us about him. Who is he, and how did he come to have such a big war, it seems like, Twitter war with Elon Musk?
Sure. So Randy Pothi is a really fascinating person. Tesla Q is filled with all kinds of people. And as I was kind of trying to explore this world, I was looking for character who could kind of explain what this community was all about. And Houthi is an individual whose real claim to fame is that he really dogged Tesla on production at their Fremont factory in 2018. And he would post these photographs of the logistics lot and the finished vehicle lot. And he seemed to really have like a bead on daily production numbers. And everyone was trying to figure out, who is this Skabushka character? Is he a contractor, a supplier, a former employee, a current employee? Like, he seems to be in Fremont every day. Like, who is this person? And as I got to know him, I just found him to be sort of a really intriguing figure. He has shorted Tesla stock, but to be clear, he's not like a major short seller in the way that we think of Jim Chanos or David Einhorn. He's actually a graduate student at the University of Michigan.
And so why is he so passionate about this? Because he spends a lot of time on this, Dana.
Yeah, he certainly did. I mean, I think that he's just sort of he's a very research-based fellow who has been a lifelong student. He got interested in the stock market and capitalism. He grew up in Fremont, not far from where Tesla has its factory. And the more he kind of dug into Tesla's financials, the more alarmed he grew by the pronouncements that the company was making. And because he lives in the Bay Area, he was kind of in a position to do on-the-ground research that is very valuable to a lot of people. So he just started putting his research out, and it all came to a head in April of 2019 when he actually followed a Tesla car that was testing autopilot, tweeted about that, and then Tesla actually went to court to get a restraining order against him.
Why?
Well, Tesla argued that he was, driving dangerously close to their employees, was trying to sort of mess up the demo, that he was a threat. And, they were clearly kind of, they felt, Tesla as a company felt threatened by his research. And they felt like they, needed to sort of do something to keep him away from their employees. This all was coming about right before Tesla was having its big autonomy day for investors as well.
Well, and what's interesting, too, is somewhere, and help me out with the timeline, there was a dossier on Houthi that was released as well. I mean, he's also been kind of feeling a little threatened as well in all of this, right? Yes, targeted.
Yeah, I mean, it's called doxing. So, a lot of people who are on Twitter use, sort of aliases or pseudonyms because there's sort of a history of people who have been critical of Tesla and Musk being doxed. Houthi was doxed as well in July of 2018, and people didn't really notice it at the time. But yeah, someone on Twitter kind of released this dossier that linked him to his graduate school, where his brother worked. I mean, so he was definitely feeling exposed as well.
So Dana, you follow this company as closely, more closely than almost anyone, certainly that I know or am able to read and keep up with. And you have a quote from Gene Munster, he's been a guest on our show as well, that I think really is an interesting take on this battle, the broader battle. I'm just going to read, it says, they, meaning the folks who have really started to, question Tesla, they put Tesla under a microscope, and they have succeeded in diluting the company's success. It leaves the average person who loosely follows Tesla confused and concerned. And I have to say, I agree at least with the confused part, because you have these unbelievably rabid people on both sides. It feels very binary in a lot of ways. What's the net effect of that?
Yeah, I mean, absolutely. It's incredibly binary. And if you subscribe to sort of one set of people and not the other, you get a completely diluted sense of what the company is all about. So, a classic example is if there's a Tesla accident involving one of the vehicles, Tesla Q will amplify those accidents, but often, and you might not see anything about it otherwise from the fans. With everything that the company does, it is under a microscope, and so. But I do think that Tesla Q, a lot of them are very smart. They dig deep into the company's financials, and they've been right. I mean, they haven't always been right, but they have been right about some things. And so their ability to kind of influence perception is an interesting one. At the same time, we have to remember that Musk is a celebrity. He has 30 million Twitter followers. And so the sort of publicity that Musk is able to garnish himself far outweighs whatever Tesla Q is able to do. I mean, it's a little bit like a bunch of Davids taking on Goliath.
Coming up, hosting the Super Bowl and more, our interview with Hard Rock CEO and Chairman Jim Allen.
Plus, fast break with Chris Paul. I sit down with the Oklahoma City point guard on finding opportunities off the court.
This is Bloomberg BusinessWeek.
Welcome back to Bloomberg BusinessWeek. I'm Jason Kelly.
And I'm Carrol Massar. Join us for Bloomberg BusinessWeek every day on the radio, starting at 2 p.m. Wall Street time. You can also catch up on our daily show by listening to our podcast.
And you can find us online at businessweek.com through our mobile app. And you can also watch us every day on YouTube. Well, a story in the economic section this week, the trouble with full employment. The Federal Reserve is trying to figure out what went wrong. Many of the things central bankers believe about interest rates and jobs, well, they haven't panned out.
Kind of scratching their head on this one. Here's Matt Boesler with his story and this week's BusinessWeek Explainer.
2019 was a tough year for the Federal Reserve. The Fed ended up unwinding a series of rate hikes it had implemented the year before. Critics accused policymakers of giving in to pressure from President Trump. He had tweeted that the central bankers were, quote, boneheads. Still, there was another reason for the Fed's reversal, and it has to do with the idea of full employment. Ensuring that is one of the Fed's two jobs, along with price stability. In 2018, unemployment fell below 4%, so the Fed believed it had accomplished its goal on jobs. The next task was to make sure that the tight labor market didn't trigger a so-called wage price spiral. That's where the higher rates came in. But inflation didn't rise as expected, and the jobless rate kept falling. It's now at 3.5%. The problem: the Fed underestimated the number of so-called discouraged jobless. They're people who want a job but for various reasons aren't looking. And then there are all the people who say they don't even want a job that could be enticed to take one anyway. That number is now 15.9%, well above the average from 1995 to 2007. And that suggests there's still more slack in the labor market.
We turn now to another type of employment problem, this one in Hong Kong.
Well, Carol, of course, the deadly Wuhan coronavirus is affecting that city dramatically. It's also adding to a problem the city is already facing. We're talking about those protests. That's keeping visitors from the tourism-dependent city, and its workers are losing jobs.
Here's more with editor Jim Ellis.
A lot of people have always thought of Hong Kong not just as this sort of shopping mecca, but also as this place of extreme wealth in Asia, particularly in China. And that's true. It has lots of millionaires. It's a place for the rich. The issue is it has an awful lot of people who don't make much money. The minimum wage in Hong Kong is actually a little less than $5 US. Wow. I mean, it comes out to being very low. It's also the lowest in the OECD. And it turns out that what you have there is a gigantic income gap that really gets felt as the slowdown in the economy happens now because of the protests.
Has the biggest inequality gap in the world, right? I think is it the Gini coefficient, right, where they measure that. So it's huge.
It's a giant difference, and I think what happens is that you really see it now that the economy is slowing down rather dramatically because of the protests.
Right.
All of a sudden, employment. This is a place where employment has always been extremely high, and unemployment's always been traditionally low. Traditionally, unemployment is less than 2% in Hong Kong. And so when you see the kinds of employment numbers we're looking at now, in retail workers, unemployment has gone closer to 5%. In restaurant workers, it's about 6%. Now, that sounds not bad for a lot of economies, but for Hong Kong, that's double, triple what traditionally is an unemployment rate. What's happening there is that people are discovering folks have stopped coming because of the protests and other reasons, so we're going to basically start firing people.
And they have, right?
And they have, and they've been firing them, and now there's a fear in Hong Kong that there will be more firings to come. People get Lunar New Year bonuses, and they'll get an extra month's salary. But a lot of people are afraid that, they'll use that extra month's salary that comes with the bonus to also count as your month's severance that you're required to pay. And so as soon as you pay the bonus, you'll fire people. And that's the big fear, right?
Well, and one of the things you point out in the story, which I find so interesting, is this notion that there's a knock-on effect, too, that if people aren't working, if the economy slows a little bit, even some of those essentially like safety net that exists, meals being delivered and things like that, that starts to get cut back, too.
I mean, a lot of meals that were given are sometimes given by restaurants for free. But now the restaurants themselves have fewer visitors because tourism is so far down in Hong Kong since the time the protests started. I mean, tourism has dropped, I guess in November, it dropped probably close to 50%. That's hard to imagine. I mean, what's happened is a lot of mainlanders, and they depend on mainlanders for their tourism because 80% of visitors to Hong Kong come from the mainland. A lot of them either are afraid to come right now or they're angry that the protesters in Hong Kong seem to be anti-China. And so for mainlanders, this has become a nationalistic issue. And so they're saying, why should I spend? Why should I go over and do my vacation there when I can go elsewhere in the world?
Up next, Hard Rock's hosting the Super Bowl. We talk naming rights with CEO Jim Allen.
And Chris Paul on saying no off the court. This is Bloomberg BusinessWeek.
In San Francisco, a lot of tech action today.
Our top stories this morning in D.C. and Boston.
Dow and the S&P.
Shall we? So the euro on a 7-day
Sizable
winning
moves in the currency market. Temperatures down 0.5%.
We begin in the oil patch. Saudi Arabia.
Brent crude pretty much unchanged.
Welcome to Bloomberg, the first word Asia.
The U.S. and Japan duke it out over exchange rate.
China's slumping onshore bond market is great.
Welcome back to Bloomberg BusinessWeek. I'm Jason Kelly.
And I'm Carrol Massar. You can also listen to Bloomberg BusinessWeek on the radio on SiriusXM Channel 119 and on AM 1130 in New York, 1061 in Boston, 99.1 FM in Washington, D.C.
AM 960 in the Bay Area, in London on DAB Digital, and through the Bloomberg Business app.
And you can watch us daily on YouTube. Just visit youtube.com, search Bloomberg Global News. Hard Rock International is getting ready for the big game. Super Bowl 54 will be played at Hard Rock Stadium in Miami on Sunday.
And we spoke with Chairman and CEO of Hard Rock International, Jim Allen, about buying the naming rights to the Dolphins Stadium.
We had been approached about this many times, and we looked at it and we said, no, probably not for us, because we were concerned.
In different cities you're talking about?
Well, frankly, in many cities, but specifically in South Florida.
Yeah.
And once we understood that Mr. Ross, Steve Ross, who's the owner of the Miami Dolphins and the actual physical structure itself, was committed to really create something that was more than just a football stadium, that piqued my interest. And, Steve would say that it was a rather interesting, back and forth between him and myself, but we were really excited when we saw he wanted to do things other than just football. So whether it's the Rolling Stones, excuse me, with their last show there, Beyonce, Jay-Z, U2, Formula One, the Miami Open, moving, obviously from Biscayne now to Hard Rock Stadium. It's really an entertainment destination. And once we were convinced that was going to be part of the script, not just the football, very, very excited.
So tell us a little bit about that back and forth. What were you really sort of haggling over at the end of the day?
I don't know if it was haggling, but I think it was more about making sure that we understood what the entertainment commitment was going to be, obviously then tying that back to the actual dollars associated with the sponsorship. And then most importantly, we did not want to do this on a short-term basis. We were in, and we were all in, or we didn't want to end up in a situation where we've got a 5-year sponsorship and then hypothetically the name changes again. Right. So, people are going to know Hard Rock Stadium for the next, well, actually we're already 3 years into the deal, but for the next 17 years, and that was very important to us.
So what does it mean for the future stadium? I do feel like there's more challenges for people, time, new fans, younger fans, they want a different type of experience. So what does it mean for you guys in terms of what you'll be doing with that stadium going forward? 20 years commitment, that's a long time. So what's the future?
Well, I think like in any physical building, there's always a conversation about reinvesting in CapEx. And if we look at Steve's incredible success, look at the Hudson Yards here. I mean, obviously he and his companies have a long track record at continuing to reinvest, to create a world-class product. So frankly, that was something that was very important to me, which we believe that the same will continue at Hard Rock Stadium as we move forward. Even if you look at what's happened since we actually signed the deal, we certainly knew that Super Bowls were a strong possibility.
Yeah.
Nothing is guaranteed because obviously the NFL has to approve that. But it was very clear in the contract, which the NFL was aware of, that if a Super Bowl occurs, then certain financial and economic things may or may not, happen with the relationship between Mr. Ross and ourselves. We believe the same will happen as we continue to, grow the partnership on a long-term basis.
And do you have any sense of how many Super Bowls? I mean, obviously they don't go too far out, but I mean, you could get multiple in that period of time.
Well,
right?
first of all, there's been more Super Bowls in South Florida than anywhere else in the United States. It's just such an ideal place for the Super Bowl because obviously Miami is an international gateway city, tremendous amount of hotel rooms. You don't have to bring in cruise ships to try to put people, for a place to stay. The Qatar Hotel, all the amenities that we offer at Hard Rock, we just think it's a natural. So we're very hopeful that many more will come in the future.
So what about some of the other properties? And I'm thinking about Atlantic City. I've spent some time down there talking to your team and other folks. You were pretty critical about what's going on in Atlantic City recently in terms of the city itself, the safety. First of all, tell us how the property's doing.
Property's doing very well. First full year of operation actually rose to number 2 in the marketplace in gross gaming revenue. So that's something that we were very proud of when you look at the amazing brands like Harrah's and Caesars, Tropicana, Golden Nugget that have been there. Caesars has been there for over 40 years. So huge database, to go up and compete against that in the first year to get to number 2 is very important to us.
Jim, is it a different type of individual who's coming to Hard Rock down in Atlantic City versus what we've seen in the past?
No doubt. We certainly focused on entertainment, Live 365.
Right.
I mean, that was really about creating, and not just music, right? So whether it's comedy with Howie Mandel, whether it's with the Niederlander family with all the Broadway shows we're doing, and frankly, really exceeded our expectations. I think it's a real compliment to the Hard Rock brand, the Niederlander family, but frankly, Atlantic City, because the numbers we did with Jersey Boys were really, really strong. So now we're going to do 4 Broadway series this upcoming season. As far as the town itself, it's not that we feel it's quote unquote unsafe. We just feel as though that Trenton, the CRDA, unfortunately the mayor was arrested again. We've seen this so many times. Now is the time to come together to say, look, we've had a company like Hard Rock invest over $500 million. A
lot.
Let's live up to what we said we're going to do to take the next step together.
But you did tell AP, you said, frankly, the town's in worse shape today than it was when we bought the building. When you're in a resort environment where safety and security is so important, if the city can't get something fixed as simple as the street lighting, then maybe a change is needed. I mean,
Correct.
It's frustrating.
Yeah, and specifically, streetlights, you would think that the local municipality would be handled that. And if they don't understand that if you don't keep up with streetlights, then safety can become an issue. But to be fair, we haven't seen crime issues at Hard Rock at all, to be fair to the city. But frankly, if you don't fix the streetlights, you're going to have crime. And that's the issue.
And so we've talked about Miami, we talked a little bit about Atlantic City. Tell us where else you're sort of looking to either to expand an existing footprint or areas of the country or even the world that might be more interesting to you going forward.
Well, right literally a few blocks away here in New York City, I just was there yesterday morning at the site. We're up to about 4 number floor in our brand new Hard Rock Hotel over on 48th Street. So we're very excited about that. On a global basis, we're opening Dublin, Madrid, Barcelona. As we look expanding the hotel division, that's something that's very important to us. So Budapest, another city where we're opening. Certainly we have gaming integrated resort deals in separate from the hotel in Barcelona, but also at Portaventura in Barcelona, technically Catalonia. And then obviously Mexico City is a project that we're extremely excited about.
Up next, Chris Paul talks about finding business opportunities off the court and learning how to say no.
Speaking of business opportunities, from Airbnb to DoorDash, who's going public in 2020? This is Bloomberg BusinessWeek. back to Bloomberg BusinessWeek. I'm Carrol Massar.
And I'm Jason Kelly. Still ahead, BusinessWeek puts gambling subscription services to the test by making one of their writers a gambler.
We did indeed. We also talked the pseudoscience reality TV of the Goop Lab on Netflix.
And Palm Beach real estate is hot, except if apparently you're buying near the president's house.
First up, though, BusinessWeek talks with Chris Paul.
Well, the Oklahoma City point guard, he fronts State Farm commercials and he backs Beyond Meat. And I should point out, I caught up with Chris several weeks ago here in New York before the tragic passing of Kobe Bryant. But it's clear the influence that Kobe had on this next generation of players like Chris.
You know, it's funny, when I was younger and I first came into the league, you used to hear about endorsements. Oh, this player's endorsing this and endorsing that. As I got older, I started to realize that the vetting process for any business deal or anything, it has to be true to who I am and true to what I believe in. And so there's been partnerships. There's no such thing really now as endorsement deals. There's partnerships and things that I really believe in and products that I use or that I really want to see come into fruition.
And how often do you say no? A lot?
Yes. It's one of those things where I am a people person. I love to, engage and talk, but you have to learn to say no, or at least have somebody on your team that can say no.
Your role in the union, obviously a very important position. Not one without controversy, not one without some conflict and conversation. Right. What's the biggest thing you've learned from holding that role? You've been in that job for a while now.
Yeah.
2013, is that right?
That sounds about right. Something like that.
May feel longer, but
I've learned so much. I've always said this. I went to college for 2 years. No business class could teach me the on-job training that I've learned as president of the union. From the other players on the executive committee, you just learn how to talk and communicate with people. Michelle Roberts, our executive director, she's taught me so much. Other people that work within the union, the conversations I've had the opportunity to have with Adam Silver, just constantly learning and really understanding the business of the game.
You mentioned Michelle Roberts. I know that some succession planning is going on there. Where are you at that point? What do we see next?
First and foremost, it's not just Michelle, it's myself, Andre Iguodala. We have board members and stuff that have been in this position for a while. And that's why I say the importance of mentors in businesses. And one of my, huge mentors in Iger that's one of the first things he said
Bob
to
Iger,
me.
CEO of Disney, yeah.
Yeah.
For those of us who don't just call him Iger.
One of the first things that he sort of, told me years ago is that succession planning is real.
Yeah.
And if we want the union to be a real business, most big businesses have succession planning. So that's all it is.
Right. So what's the most important element of succession planning for that particular part of the organization?
Just making sure that whoever the next person in line is knows about the conversations that are being had now.
Right.
And so that's what I'm doing also with other guys that's on the board, is trying to find out who may be interested in being the president after me.
Right.
And just making sure that, if there's conversations being had now, they're involved in them. That way, if they do take over, it's not just brand new.
Right. So you mentioned Adam Silver. Also have to ask you about his predecessor, David Stern. You obviously knew him well. What do you make of David Stern's legacy?
Yeah, our game is a global game now because of David Stern. His vision to have the game what it is now is unbelievable. And, we have young guys that come into the league year in and year out, and you get into the NBA and you just expect that you're supposed to go to China and everyone know who you are and stuff. But it's important for us to educate them and let them know that was David's vision.
Right.
You can say this or whatever you want to about the trades or this and that, but we're not where we're at as a league without David and his vision.
Right. And I'm glad you brought that up in terms of the global expansion, because I would imagine you also, as a businessman, think about a global opportunity for yourself. China obviously is an obvious place. Africa is a newer vision, it feels like, for the NBA. How do you see that playing out?
Man, NBA Africa is unbelievable and it's continuing to grow. I had an opportunity to play in the first game in Africa a few years ago, but it's still mind-blowing to me, because when I was a kid and I was in the backyard, I was thinking about how can I be the best player on like in my neighborhood. You know what I mean? Then I wanted to be the best player at my school, right? And then I thought I was doing something when I was named Mr. Basketball in the state of North Carolina. Now, kids, you're playing against the kid in Australia.
Yeah.
You know, you're playing against the kids in New Zealand and Africa and all around the country. And it's crazy when you think about the game and where it is now, and it's only going to continue to grow.
From the future of the NBA to the future public market now, Jason, you mentioned that Chris Paul, he was a backer of Beyond Meat. That was one of the many companies that had its debut and went on a bit of a wild ride last year.
A pretty good ride for Beyond Meat, but we can't say the same for everybody else. And even in aggregate, Kaylee Lyons, a very smart chart she's got about how IPOs actually did last year. Tell us about it.
Yeah, well, let's look at them in aggregate. The best way to do that is to look at the Renaissance IPO ETF, which tracks these newly public companies. And if we really look at it over the entire course of 2019, it actually outperformed the broader S&P 500. But as we can see on this chart, when you take it back to basically the start of April, which is when Lyft went public, followed by the likes of Pinterest and Uber, and that white line, which is that IPO ETF, starts to lag pretty substantially. It was only up 2.4% over that time horizon relative to the broader market in the blue line, which was up nearly 15%. Now, of course, a big part of that reason for the underperformance of that is that Uber is the top holding in this ETF, and Uber, from the time it went public in May to the end of the year, fell 34%. It was pretty ugly.
There were such high expectations for these names, right? And then, of course, WeWork didn't even have its IPO. We know all the problems surrounding that one.
Which just goes to show you that 2019 proved to be the year where the profitability of these companies really mattered, and the path to profitability especially.
Kaylee Lyons, thank you so much.
Well, the magazine has a look at what's on tap when it comes to IPOs for 2020. Now, the big one is Airbnb. It could be the highest profile debut. It's considering, Jason, a direct listing, meaning it won't be selling new shares to raise capital. Instead, existing private shares will become tradable on an exchange, and that gives early investors a chance to profit. The company, keep in mind, valued at $31 billion in a 2017 private funding round. We'll see what happens this year.
Well, and we're all going to be chasing food delivery. Postmates and DoorDash both on tap to go public, potentially. DoorDash also considering, like you said about Airbnb, a direct listing. Direct listings almost unheard of until Spotify did one back in 2018. Now VC firms and investment banks, they're promoting them pretty fervently.
All right, and then you've seen their ads all over the subways, or certainly if you take the trains. It's really going to be a test of the influencer economy. The bed-in-a-box mattress retailer, we're talking about Casper, filing for its IPO this month. Now, it warned investors that it relies heavily on marketing through people with large online following. So we're going to be watching that one really, really closely.
Absolutely.
As well.
Is it a unicorn? Isn't it a unicorn? Maybe we'll find out. All right, coming up, Business Week gambles. One reporter puts online touting services to the test.
Plus, the pseudoscience reality TV of the Goop Lab on Netflix.
This is Bloomberg Business Week. Welcome back to Bloomberg Business Week. I'm Jason Kelly.
And I'm Carrol Massar. Join Bloomberg Business Week every day on the radio starting at 2 p.m. Wall Street time. You can also catch up on our daily show by listening to our podcast.
You can also find us online at businessweek.com through our mobile app, and you can watch us on YouTube. Just visit youtube.com and search Bloomberg Global News.
You can catch interviews like this one with ShirtFace founders John Wolfe and Eric Ray.
And we did say ShirtFace, just to be clear. We're talking about the duo behind the white T-shirt with a shirtless photo of 49ers quarterback Jimmy Garoppolo that went viral thanks to George Kittle.
Like this one.
You've got your own unsigned version there.
Still pretty cool.
The idea really was inspired by a class last year. I'm in business school at Columbia, and in one of our economics classes, a student ordered a shirt face with the face of the professor on it, just as a joke, and wore it. And the next day, the professor ordered the same exact shirt and wore it and got a ton of laughs, and it was a huge hit with the class. So we started thinking, how can we bring this to bigger communities outside of just grad school, right? So during the AFC and NFC Championship week, I started going through social media accounts of some players from all of the 4 teams remaining and just thinking, okay, how can we get these guys in on the fun? What would be something that would make their locker rooms laugh? And I sent a couple shirts to each team. One that stuck right away was I sent TJ Sharp a picture of Snoop Dogg wearing a Titans jersey.
Nice.
And TJ put that on his Instagram when he received it, and then Snoop Dogg shared that. So we started thinking, okay, maybe there's something here. And I really put a lot of thought in, all right, who is the biggest character on the 49ers? And I knew it was going to be Kittle, and I knew it had to be something involved with kind of teasing Jimmy.
Yeah.
So I was just looking through photos on Google of, funny Jimmy G, and I saw shirtless Jimmy G, and I just thought, it's always tough to predict virality and what's really going to hit. But Eric and I have been talking a long time about how right now organic content is really hot, and you don't need something over polished. You don't need a big caption.
Right.
You just need to get to the punchline. It can be as simple as a photo you took on your phone from Snapchat. As long as it has the punchline, it'll stick, and we just thought it would really play on the podium.
Well, I feel like you guys stepped in gold, and I want to talk about you actually sending it out to a bunch of players. I mean, think about these players, Eric. I mean, they get a ton of merchandise, right? And they can choose to wear or not wear. Your shirt got worn. I mean, that's pretty amazing. What did you think it was even possible? And tell us about the moment when it started to kind of blow up your phones and blow up social media.
Yeah, absolutely. So, we thought there was maybe a chance that it could work, because every now and then you see celebrities wear something that someone sent them. There's actually websites online where people talk about, hey, I sent this fan mail to a player and they responded like, oh, great. So we thought, okay, well, these guys actually do read these things and, maybe we'll give it a shot. And so really we sent the shirts. The only one we saw any action off of was the TJ Sharp shirt with the Instagram post. And, it wasn't really at all linked back to us, so there wasn't too much coming out of that. And by the time the game was on, we sort of had just forgotten about it. And then after the game, I got a call from John, and he was just screaming. And I said, what's going on? There were a bunch of guys over his place watching the game, and it turned out Kittle was wearing our shirt on national television in the after the game interview.
Who did the internship that understood that that you can actually get things to players directly?
Yeah, I had interned with a different NFL team during this preseason, and I came home thinking, okay, they're pretty good about fan mail, and they try to do a good job of getting it in players' lockers quickly, especially if it's a package. So that was where I kind of started thinking, okay, how can I reach somebody with something? I figured you only get one shot, right?
Yeah.
So it had to be a good shirt that would make them laugh, and that's what we went for.
And so, Eric, what happens next? I mean, how do you leverage this for the business?
Absolutely. So, what we really want to do is we see this kind of as building a brand, right? And our mission is to make it just as easy to take a photo or a meme from your phone and put on a t-shirt as it is to send that to someone or post it to Instagram. And so we really see this exposure, as an opportunity to sort of start partnering with different folks and working with producers of viral content to create photos, and also to use that to promote our brand and really promote the understanding that people can do this themselves for, takes them a couple minutes and $15, and they could have it on their door 2 or 3 days later.
Right.
And really we want someone to see a shirt and think, oh, shirt faced, or they see a photo on their phone and say, oh, that'd be funny on a shirt, and I can do that really quick, so let's give it a shot.
Yeah, and the biggest way we capitalized was as soon as Eric saw this, and we were all screaming, our friends were screaming, Eric spun out in 30 seconds a subdomain of our site, which was geared just at Niners Nation, with a copy of the original. So we've had sales through the roof for the last 7 days of people not only buying custom shirts, but actually buying that pre-made
They want to wear that shirt.
Exactly.
So we'll stay with sports on this Super Bowl weekend. One BusinessWeek reporter, he put subscription gambling services to the test.
He did indeed. Here's reporter Ira Boudway on his betting experiment.
We had seen this new handicapping service, Tout, they call it, which is somebody who tells you what to bet. And frequently they do that for a fee. And there was this new one started by a former Major League pitcher named Michael Schwimmer who said, this is going to be legit. Like, touts in general don't have a great reputation.
Yeah.
A lot of scam artists out there. He said, we're going to do this for real. I've got $23 million in backing. I've got Bill Miller, Wall Street money. We're going to publish our picks. We're going to give refunds if it doesn't pan out. This is going to be like the real deal. And I said, oh, well, let's see. Let's try it out. So I spent a week in New Jersey where you can bet legally, bought a week-long package of his picks, the company's Jambos, and gave it a shot.
How does it work? Give us an idea of what it costs and your experience with it.
So I did the smallest package, $250 for a week. You can spend a lot more, $3,000 for 17 weeks if you want. And they send picks, they alert you every day about 11 a.m., that day's picks. Really depends. It could be 5, could be 40. And you try to hustle out and find a bookmaker who will give you the bet they're saying you should take. And they've checked, they have their sort of bookkeeper of record, their bookie of record that they say this bet's available, but that stuff moves, as I discovered, really quickly. So I was, okay, let me get on DraftKings.
Which impacts the trade then, right?
Right, sometimes you don't want to make the bet anymore.
Right.
So that's the issue for basically every handicapper is the better you are, the faster the market moves, and the harder it is for anyone to use your advice.
And that was ultimately what you discovered is that this company was quite literally the victim of its own success. It feels like, spoiler alert, almost like put itself out of business in some ways.
I mean, there's a couple ways. I mean, that's sort of their version of events. So they said, as I was doing this experiment, they said, we're going to stop selling picks at the Super Bowl. And their explanation is, lines are moving so quickly after we put out our pick. In other words, bettors and bookmakers are responding to our picks.
It's fluid,
right.
It's not static.
These are fluid markets. They're not the same at every bookmaker. And so this is no longer working for customers. And I saw some of that myself. There were a lot of bets I couldn't get. Like I got 111 picks. I wound up betting like 75 of them. But it's also possible that, this service just wasn't
that good,
panning out, right? That the picks were not so valuable, they just weren't that valuable, right? So it's hard to say exactly why, but they are saying, look, we're not going to sell anymore. We have different business plans. We're coming out with new things in the future.
Did you make money?
I did, but by sheer luck. So those bets that I didn't get to make out of that 111 are mostly losers.
Okay.
So the company's picks for that 111 period down, and a bettor who had been able to get every bet in would have lost. I was lucky. The bets I didn't get in, losers, so I finished up about $60. You know? Yeah.
Up next, call them goopers, call them goopies. We're talking about the pseudoscience reality TV of the Goop Lab on Netflix.
Plus, Mar-a-Lago's neighbors, well, they have a few mansions for sale.
This is Bloomberg BusinessWeek.
Welcome back to Bloomberg BusinessWeek. I'm Carrol Massar.
And I'm Jason Kelly. You can also listen to us on the radio on SiriusXM Channel 119, also AM 1130 in New York, 106.1 in Boston, 99.1 FM in Washington, D.C.
AM 960 in the Bay Area, in London on DAB Digital and the Bloomberg Business app. And you can also watch us on YouTube. Just visit youtube.com, search Bloomberg Global News. Pursuits this week, it's a look at the Netflix reality show that turns Gwyneth Paltrow's squad, her employees, into guinea pigs.
Call them goopers, call them goopies, whatever you want, but it's controversial to say the least, and it comes with a literal warning. Here's reporter Polly Mazens.
It's Gwyneth Paltrow's brand, and they've always been into alternative medicines and alternative healings. They've been in trouble before with the law.
It's been around for a few years now.
Oh, yeah, it's been around for a little while, and it's kind of caused a controversy every little while. They'll have something pop up and everyone's like, what on earth is that? So that was the jade egg issue where they said that was good for a woman's vaginal health, and they were later fined.
I was going to say, if you don't know what it's about, just Google it.
Yeah.
And we won't go into all the details.
And that was sort of the big conspiracy for a little bit. And then this show is basically every episode, it takes one alternative healing method and basically puts it to the test. And the people who are testing it are called goopers. Sometimes also goopies, mostly goopers, and that is Gwyneth Paltrow's staff at Goop.
And so take us inside the sort of whole Goop mindset, because it's really important. I mean, it seems to be a reflection of what Gwyneth Paltrow really thinks life should be about and products that she likes and the way she wants to live her life. I mean, one of the things that strikes me is there's a photo that accompanies the story that has the Goop War Room, and it looks like exactly what you would think a Goop war room would be. No war. It's barely a room. In the sense, it's just this sort of spacious, very sunny, sunlit.
Pink couches.
Yeah, exactly. Pink couches.
Soft pink.
And a lot of presumably like affluent white people sitting around and like solving problems that no one really knew they had.
Yes, I think the trailer puts it best when they say that they're there to test ideas that are maybe too scary or too out there. And they're going to test them to see if they're therapeutic, if they're healing in any way, if they can help their staff, be it something that they should, would usually seek therapy for, or a medicine that they're taking. This might be an alternative to it. So that's what every single episode aims for, is to test that theory. And in some cases, the ideas are not too crazy, like eating right and exercising are the keys to a long life. Yes, we all agree.
Right.
And then in other cases, it's a breathing technique that allows you to withstand very, very cold weather, taught by a man who has a bunch of World Guinness records in that space of being able to, be outside in crazy, crazy temperatures or swim in crazy temperatures. And the Goopers test this breathing technique to see if it works. They cry. There's always cry. Every episode, someone cries. And they, are doing this kind of arm gesture, which is just amazing to watch from a comedic perspective.
Right.
But at the end of the episode, one of the main Goopers actually says that her anxiety is more under control and she is working with a doctor to wean off of her medicine.
Staying with pursuits, real estate sales have never been better in Palm Beach.
Except, though, for a cluster of 10 mansions within a half-mile of the President's Private Club. We're talking about Mar-a-Lago. Here's James Tarmy. He went there.
3 homes last year sold for approximately $100 million apiece. But yes.
A piece?
A piece.
Oh my God.
Yes. So it's really flying off the shelves. Empty lots, tear downs, mansions, everything in between. Everyone is buying is the answer. People from all over the country are buying, but also people within Palm Beach are trading up and trading down, and it's very much this kind of weird microcosm where real estate is constantly being changed hands. And so within this entire ecosystem, there is around Mar-a-Lago, which is this former estate for Marjorie Merriweather Post. It's this colossal piece of property in Palm Beach that bisects the entire island. So around this estate, there are a cluster of unsold houses. Some have been on the market for years, some are just coming onto the market, but it's a crazy anomaly. Things like this don't usually happen. And so the question is why?
Right. And you have at least a couple people saying, nothing to see here, move along, it's just a coincidence. And yet. So what did you find when you went down there? What are the consistencies among the properties? What did you take away?
So this, to give some context, there is something that's called Billionaires Row, which is directly south of Mar-a-Lago. And that is where, if you can believe it, there are a lot of billionaires. Directly north of Mar-a-Lago is the estate section. These are all real estate fabrications.
But terms of art.
Yes, but they are in whatever way reflective of the fact that homes are oftentimes in and around Mar-a-Lago around $5 to $20 million. Right? Not cheaper. This is not a cheap place to live. And what's striking is that there's a tremendous amount of new construction, there's a tremendous amount of recently renovated buildings, and they are all for sale and they are not selling. And so I talked to a variety of brokers. Everyone had different solutions, everyone had different diagnoses. The one thing that everyone agreed on was that it had absolutely nothing to do with Donald Trump, who they all refer to as he, as in when he is on the island. No one refers to Trump by Trump's name.
Seriously?
It's like he, his, with a capital H. It's very weird.
Bloomberg BusinessWeek is available on newsstands now.
Also online at businessweek.com and on our mobile app. Your must read this week.
You know, it's Polly Mazen's look at Goop Lab. It's such a 2020 story in so many ways because it's talking about streaming.
Right.
It's talking about influencers, health and wellness, all important things.
Bringing it all together. And you got to love a streaming series that starts with a warning. All right, my must read is actually a must read, a must watch. It's in the magazine, but it's your interview with Chris Paul. Successful athlete. He's still playing the game, but off the court, he's looking at investments, and it's really interesting to see how athletes at this point, how they're leveraging their name, their brand, what kind of investments that they're making.
Yeah, it was a pretty serious and long-form conversation. You can see and hear that whole interview online and through our podcast stream. Also, via podcast, we were able to republish an interview that we did last summer with Kobe Bryant. We caught up with him at the U.S. Open, and with his tragic passing this week, a reminder of what he was all about. He talked a lot about his daughters.
Right.
He talked a lot about his post-basketball life and all the ambitions that he had.
Really set the model for so many other athletes out there.